Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we are joined again by the man himself, Mr. Rizwan Memon. How are you doing this evening, Riz?
Doing well, Chris. Thanks for having me on.
Oh, of course, it's always a pleasure. I mean, it's your name's on on the side of the building, as I like to say. So I think it's fair that we let you join the webinar every once in a while.
Yeah.
No, it's great. I'm glad everybody's here this evening. I promise you we've got a lot to talk about because the market has decided just to bounce like no one's business. You know, we had this little tiny correction last week, and then it has been pretty much nothing but green skies except for Thursday. And we recovered all that on Friday, making a new all-time high on the S&P 500, sitting at 415.33, closing just a smidge below that. Riz, what is your take on this? I know we've been, thinking we'd be having some type of a correction here for a while, but man, we haven't. It's been nothing but up.
Yes, it's definitely one of those conundrums where the market doesn't want to essentially pull back whatsoever. And any little pullback, whether it's 1%, 2%, is just pick back up. And if we look at, you have that channel trend line upwards channel and you could see, it's not much of a dip. And every time it does occur, it just bought up. And this is prevalent all the way going back to Q3, Q4 2020. So this tells me that the market and the participants, the investors as a whole, have a significant amount of risk tolerance. So they're always in a risk on mode. So when people are buying the dip, when people are putting their capital, at a 1% drop in the broader market or 2% drop or even a 3% drop, that tells me, they're willing to deploy capital at any chance they can get. And this is for many reasons. I think the market and institutions and general, investors believe that at this point, the Federal Reserve, is going to continue their loose monetary policy. They're going to continue to keep rates low, and in fact, they've said that. And I feel I'm in the more rational kind of camp where I feel like if we continue this way, and when the economy does start cooling down a bit, they won't have much else to do. So if you have all-time low rates, you have money printing going on, you have stimulus that has been given out to people over the last year or so, you have a tremendous amount of quantitative easing, bond buying, and all that kind of stuff that's been going on over the last year and a bit. That leaves the Federal Reserve not with much else they can do if the economy starts cooling down, which eventually it will. And that's a normal function of the economy, to have its ups and downs. It's normal. The longer I think we keep pushing this further and stretching it further and further, not only from an economic standpoint, but specifically the market standpoint. Remember, the markets are a separate beast, a separate animal to the economy. A lot of people think, oh, the market's going to crash, so the economy is crashing too. Not necessarily. It's not always one-to-one. So I find that we are due for a pullback. Absolutely, we have been due for a pullback. I mean, you probably heard the statistic that since last year's low, the market has rallied over 100%. And I think we showed that too last time, Chris. I think it's over 100% now. It's 100% from the March or April lows from last year. And wow, it's essentially, what does that mean? It means it's doubled, right? You could have bought the index, forget any individual stock. You could have just bought the index and you'd be up about 104% now. If you were able to hang on to it all this time. I'm sure there's companies out there that have gone, up 500%, 1,000% since that same time frame, right? Absolutely. So it's very tricky. It's very tricky. There's no denying, and almost anyone who's looking at it from my point of view has my kind of pedigree and experience, or more, is going to tell you that yes, we are due for a pullback. Now, when is it going to happen? we don't know. It's supposed to happen. We don't know when though, and that's what makes life a lot more challenging and interesting, I guess you could say. So I continue to just monitor how things are. I'm not fighting the market. I'm not going to be like out there shorting and buying puts on everything. I'm not doing that. I've been cautious. We did have some hedges over the last 2 3 weeks. One of them worked out. One of them from this week didn't, but it was a very small position, so it's fine. That's what a hedge is supposed to do. Just it's like insurance, really.
Absolutely. Thank you for that analysis. It's very helpful. I think giving people an idea of what's going on, because it's very tricky to trade right now. It feels like I mean, how do you attack this? I know you said that we're being more cautious and things like that, but like what type of things do you look for in a market like this to be able to trade successfully?
Correct. Yeah, it's a great question, Chris. A few things, and I tell our elite members, obviously, it's kind of a recurring theme, but and I feel like I'm a broken recorder, but it's crucial. It's important for me to say it and keep saying it until it's drilled into everyone's head that we want to decrease the amount of new positions, new stock trades, or new long options trades. Short options trades, okay, they can be done throughout this environment, so long as they're done strategically using my methods. But taking new trades on whims and fancies, you have to be extra careful. It doesn't mean you can't take new trades. It just means you have to be extra careful. You have to be tighten up that sort of criteria that really fits into a trade. You can be a little bit more relaxed when there's opportunities abound, but when it comes to times where markets are extended, where predominantly many sectors and industries are running hot, of course there are some opportunities present. I'm sure there's the market has 3 4 thousand plus individual stocks, the U.S. market, and so there's opportunities abound for sure. But I always like an excess margin of safety in the stocks that I buy. Again, it's just my style and my way of approaching the market. So I'm a bit over the last 2 3 weeks. I've been a little bit, I would say, not cautious only, but slowed down on the amount of new trades, and it's evident to our elite members. And it's not to say that I'm not doing anything, or I'm not watching, or I'm just on vacation or something, because I'm not. I'm doing everything I've been doing, but it's a conscious decision. It's a matter of discipline, patience, not taking too many new trades, and the ones that we do have, be patient with them. Whether in the red, be patient with them, and for the ones that are in profits, you know, set those stop losses, stop levels, where you get profit stop, if you want to call it, and let it run, but with the mindset that the moment, it curls back down, or it loses that momentum, you take the profits because the market is already overextended. If we get a 2 3 5% pullback, remember, I'm not going to say that we're going to have it, it's going to happen this month or next month or even this year, but if we do get a pullback, whether it's 5% or whatever, you don't want to be hanging on to something that's profitable and then you just kind of it's already extended, and now you're gonna turn a profitable trade into a red, a sort of a drawdown. So that's something I'm kind of recommending people do, and that's my outlook, and that's something the elite members will know in real time. And as you know, I've closed like 2 3 positions that were profitable just on Friday itself.
Yeah, absolutely. I believe someone told me sometime that no one ever got poor by taking profits. So guys, make sure you're taking your profits when you get them. Don't let those trades go red, and just be agile in the markets. Be ready, and make sure that you are, locking in those gains. One thing I have a good friend of mine who he's not an elite as much as I've tried to get him in elite. But he's always somewhat of a glutton for punishment, right? So he'll close a position and then like, oh, well, if I held it longer, I could have gotten this much more out of it. Guys, if you make money in the market, be happy about it, take the profits and enjoy it, because you made money from nothing.
Yeah, and to add to that, Chris, I always tell people that are newer to markets. I mean, it's a shame, your buddy is, not willing to come to and see the light, in so to speak, in terms of elite. But you know what? You can't save everyone. I've had to learn that
Yeah.
the hard way, over the course of my life in many aspects, not just in trading. But what I can say is is something that I think will resonate with almost everyone, especially the more newer traders and investors, is that if you're making money in the stock market, something that you're doing from your phone or your computer, most likely doing it from your office or workplace or your home even, and you are making money, and I don't mean in a short term, but generally speaking, you're making money. It doesn't matter how much you make, how much little you make. If you make money, that is extraordinary. And to me, that is more than enough and something to be happy with and grateful about, because guess what? We are not working at those companies. Like if I make money on Apple, I don't work for Apple. If I'm making money on a trade on Amazon, and I don't work in the Amazon, you know, uh, floor, the fulfillment plan. I'm an investor in Amazon. I have a sizable position in Amazon, and I'm not going to repeat myself how much I have, but I it's beautiful, it's amazing, and this is capitalism. And one of the amazing things about capitalism isn't perfect, but capitalism is a system that works. And of course, I'm not going to get into the whole political side of it, but it's a system that works, and you can make money from it by doing other things. There is no rhyme or reason for anyone to complain if they made a little bit of money or if they made a lot of money. I'll tell you something. In my 14 years of doing this now, anytime I make money, I'm okay, whatever. It's one of the reasons why I'm so reluctant to take losses, because it's my style, my strategy. I have the risk tolerance. But as much as I hate losing money, I'm very, very happy in terms of whether I make $5 on a trade or $50,000 on a trade or $100,000 in a position. It doesn't matter. I'm happy and content, regardless, because I realize the reality of it is that we are not slaving away for the company. We're not, breaking our backs for it. We're not, answerable to the bosses at those companies or management. We're able to profit from them, and that to me should be celebrated, and people need to reframe it and think of it that way.
Very well said. I couldn't agree more. And yeah, I don't want to assemble iPhones, guys. I'll be honest with you. So, yeah, I'm more than happy to make money off of Apple with them in the stock market, as opposed to going and working at the Apple factory. All right, guys, let's take a look here at the breakdown for the S&P 500, taking a look at what is pushing this rise. And as we'll see in energy here in a minute, I think Riz will probably have something to say about that. But I want to talk about this. Quite an interesting push here in the financial sector. Riz, is this something that's being pushed by earnings, or is there something else going on here in the financial sector?
Yeah, so we know earnings for the banks was already done, and they had pretty good earnings overall. But I think this is financials were cooling down from the start of mid of August, you could say, but they completely reverse course, and now are bringing back and clawing back some of the earlier highs that they were at, and I think this is primarily because the the Federal Reserve's policy of continuing to keep, I would say interest rates the way they are, which is not the best thing for banks, but also indicating that, what, they're willing to do what it takes at some point in time, when it comes to, perhaps easing off on that quantitative easing, and perhaps adding and making sure that they're looking at markets in a way that that can be suitable to the broader market, the economy, and as a result to the banks, because guess who's has the biggest exposure, whether it's to homes, whether it's to the markets, or whether it's to pretty much anything and everything people own. Who are the biggest financiers behind it? Well, it's the banks, right? They have the biggest exposure. So anytime the market is given and the economy is given that kind of thumbs up in seeing that we're watching it, we're going to control inflation, all that kind of stuff the Federal Reserve says, um, mind you, they may get it wrong, but that's one of the reasons we're seeing a correction not a correction, but I would say a recovery in financials, and it's the leading sector across these.
Absolutely. One of those other sectors that's making a fantastic recovery here is energy, and that is driven pretty hardcore here by oil. Now, I know we took an oil position earlier late last week, if memory serves, and then we added to that, and that has worked out spectacular. So, are we thinking that right here around 61.60 is pretty hard support here for oil? And do you think this recovery will continue, or do you think oil is going to cool off, Riz?
Sorry, Chris, I missed that last little bit.
Yeah. So, do you think obviously we had a really hard rebound here off of this 61.60 area? Definitely a great, buying area there for oil. Do you think this oil recovery will continue, or do you think it's going to cool off a little bit?
Yeah, I think, this can continue. A lot of that sell-off was in line with broader market dip, that 2% dip we had. And of course, there was more headlines about Delta variant. There was more, kind of uncertainty around it. We had more cases in the southern states in the US. So all that kind of compounded that sell-off. It was one of the largest, or I would say the longest sell-offs in oil for a long, long time. And it doesn't seem like much, but it went from around 76 all the way down to 61. And as Chris is showing, it was roughly 20% from that high to the low point of 61.74. So area. So you know what? It is actually a substantial pullback, and with things easing, I think the $70 mark is, I think, a key area. I don't have a position in oil directly anymore, as we took profits, but I think 70 area is that kind of sweet spot. If we do get a pullback, then of course I'll consider another position going long. But at this point, I'm just kind of staying put.
Awesome, Austin. Thank you for that. And gold here making a pretty solid push on Friday. My guess is it is kind of following the markets here. And we've talked about hedges before. I know that in the past, gold had been considered a hedge against inflation, though not so much at this time. Obviously, I know we're not taking a position in gold anytime soon. We don't have any positions currently. But Riz, are you seeing anything from this? I mean, quite the rally here from the dip on gold.
Yeah. The past weekend of it has been really, really solid since gold just briefly touched that 1680 area, and bounced up and picked up nicely. But yeah, you're right. I'm not really too bullish on gold as a hedge. I find like it's a bit of a dead capital kind of position to have, because you're better off using it for elsewhere. Because when you're buying a gold ETF or something, really, what are you getting? You're not really getting much. You're not getting that physical gold in your hand. There's no utility for gold. Like, you can't go out and give someone a gold bar and get something freely, or you can't redeem your ETF shares for something. So I feel like there's no point really having any exposure to gold from ETFs or anything at the moment, not at this price point, because it's not always acted as a good solid hedge on inflation, because everyone knows inflation is here, whether it's permanent or whether it's for the time being, it remains to be seen. But guess what? Gold is still moving around at this 1800 area for how long, Chris? I think the last 6-8 months, I think. What is it? Yeah, 12 since March, even longer. Yeah, look at that. Like, it's not really doing much. So yeah, if you can get in and get out, otherwise it's not a asset class that I see doing too great in the intermediate term.
All right, something that some people would consider an asset class that is doing pretty decently right now is crypto. Crypto making a really strong push here after this, huge sell-off. Once we hit the 64,000 mark here on Bitcoin, sold off, lost almost, or actually, yeah, just short of half of its value. Starting to make the recovery here, sitting right around 48. 48, and in these mid to upper 40s, this seemed to be pretty solid resistance for Bitcoin at this point. Riz, what's your take on this?
Yeah, I mean, this looks good. We talked about it last week, and I said, you know what, I think it can definitely continue, and we it did hit $50,000 a coin, and just hovering slightly below it now. And the fact that it's holding so far is good. It's a good sign. And you'll notice that white line there, the 200-day moving average, is right there as well. So overall, this is pretty good. for crypto markets. The fact that it sold off from around 64K to the 30K area, and yeah, I was kind of just sitting there for a while, for a few months, but the fact that it held is still, I think, a pretty good accomplishment. We know crypto kind of moves, especially Bitcoin and these larger coins, move in a bit of a kind of a hype, and kind of the opposite of hype, whatever that is. It kind of term, it moves up and then just kind of cools off. And we've had periods of tremendous hype and everyone talking about it, followed by, doldrums where no one's talking about it. People are just like, I'm just hanging, I'm just hodling. And that's what we kind of saw from, I would say June to, August. So I would say that, the fact that the crypto market as a whole had moved on from that and now seems to be kind of continuing that trend upwards. I wouldn't be surprised, if we go see, 52, 50,000, 55,000 in Bitcoin. And then it will be remain to see if, people start taking profits once again. And if we can hold or maybe continue to rally to 60.
Awesome. Well, we talked about a couple things that we got out of, primarily our oil positions and a few others. Riz, is there anything that you're keeping your eye on this week that you might give us a little insight on what you're looking at?
So this week I have been tempted to just look at things. I'm just I have it on my preliminary list, but it's not something I'm too, I would say, stoked on per se. And I don't think it's something that I want to tell people to just, I would say, get them to look at something that I find is maybe not too optimal. One thing I will mention is Alibaba is a stock that, and for many of that have been paying attention either to me in Elite or even my webinars, public webinars and live streams over the last year and a half, will know that I haven't, I've avoided Chinese companies, and guess what? I was right to do so, because it's not just Alibaba; it's pretty much all these Chinese companies have dropped. I think the Chinese market, has lost about multiple trillions in market cap because of the sell off. And why has the sell off occurred? Because China's CCP party, its leaders, and have said that, we're gonna kind of keep these institutions, these large corporations, these multi-billion-dollar earning corporations, in check. They should do their part to, benefit the Chinese people and society, and they shouldn't be having too many runaway profits, so that it just kind of enriches the people at the top. So they've kind of said that, I would say they've put that in the minds of the people and investors, and especially the companies, and this is why we're seeing this sell off in larger Chinese companies, because maybe there's going to be some restrictions or limitations on what they can do, and yada yada. So I think it's not a permanent thing. I think the Chinese government, of course, wants its economy, its corporation, the stock market to succeed, move up, and run. But they're just doing this to kind of exert their authority, saying, you know what, hey, we're always watching you. You are answerable to us, no matter if you're a public corporation or how big you are or small you are. And that's how Chinese pseudo socialism / communism, whatever you want to call it, / capitalism works. And for them, they believe that they are the ones with the ultimate control, and Xi Jinping and the CCP leaders party, they want to make sure everyone knows that, whether it's Alibaba or the other larger companies like Tencent, or whether it's something like JD or DD and blah blah blah. So there's so many of these larger companies that they want to make sure that they're well aware that the CCP is watching, and that they're going to keep an eye on it. And so what does that mean? Ultimately, I don't think this is a permanent thing. I think there are some now solid opportunities in Chinese stocks, and I didn't think I would say that ever, but here we are. And Alibaba is shaping up to be one of the best opportunities out of this sell-off. So I think if I have to pick one stock for this week for people to consider, I'm not going to say go out and get it or buy the dip and buy it with everything you got. And I'm going to still say, it's a good opportunity, but with the asterisk, which is there are, of course, risks involved. Anytime you have, a company, like a Chinese company, there's always risks involved. Even more so now after all the kind of chatter from the CCP, which I touched on. But that doesn't mean that these companies are you know going to stay at these valuations or these levels, and they're done and they're never going to continue to grow. That's not true. The Chinese government has a hand in these companies, and they want them to be profitable because it benefits them, right? They have direct exposure in China. It's not uncommon for the Chinese government, the CCP party, to have some form of exposure to the direct exposure to these large Chinese businesses.
Very interesting analysis. I know we have avoided the Chinese stocks for quite some time, but Bob, obviously one of the big ones, one of the big dogs. So, yeah, let's put that on the watch list and just keep an eye on it. Let's see what happens. No need to run out and buy it. Like Riz says, we're just going to kind of keep an eye on it. One thing I want to do before we get to questions is kind of our one big trade of the week was no, it wasn't USO. It was UCO, wasn't it? The ETF.
We did USO.
We did USO. Okay.
Yeah, we did USO buying the ETF directly and then averaging in.
Yeah, so Riz, kind of walk us through that. What did you see in this trade? Obviously, oil is your specialty. It's something that you've traded quite a bit in the past. So just give us an idea kind of what you were looking at so, people in the future might learn from that.
Yeah, so this was a pretty simple trade, all things considered, mostly a technical standpoint. When I saw that oil had declined significantly, and I felt that, I think it's going to, again, we know USO, the ETF tracks oil, and it's about, I bought around, I think, 45 something, I think, Chris, 44, something like that. But I'm looking at it primarily from a oil price per barrel. So I knew that, I bought it around when WTI crude was about $61 or $62 a barrel. And that's, I felt, was a good area for an entry. And I even said that, look, I'm taking a position, but I'm completely okay if it goes lower because I will be buying more if it gets closer and closer to the $60 a barrel level. And to me, I knew that $60 area was crucial because I've talked about it over and over again the last year, and it worked out brilliantly. And if you flip over, Chris, to the oil chart, just type in CL. Yeah, you could even do that. And here we are on the left hand side. You could see, the moment we hit about 61 area, 6160, 6150, we just picked up. So that worked out beautifully for me. I didn't get it exactly at 60. But hey, it was just a matter of getting in, averaging in, and then letting the trade work, and then taking profits and not trying to, chase the goose. And that's what we did. And we got out, and I think it was a great, simple, trade in terms of these kind of trades are not always something that occurs. And when they do occur, you got to just sit back and be grateful because it was a very low stress, low volatility, low kind of risk trade if you really think about it, and it worked out perfectly.
Yeah, so entry on this was 44.80, and guys, I just wanted to talk about this because if you're not part of Elite, this is really where the value comes in. Because let me tell you, when you're looking at a chart, I just want to zoom it to the left here. When you're looking at a chart like this, it can be a little intimidating. So you know what? I'm going to get in on this candle here when you're seeing this huge downtrend. But guys, this is the benefit that Elite has. You have all of Riz's experience coming in on this, and you get to see a trade like this. Absolutely beautiful, easy trade that was done in, 5 days. You can't beat that, guys. And this is the type of trading that we do here in Elite. And I just want to encourage, if you're not in Elite and Riz opens up membership again, please make sure you jump on that because it is something that can change your life.
Chris, glad you mentioned that because guess what? September 8th. If you're watching this and you're not in Elite and you're watching the recording afterwards, September 8th, mark that down, get on our mailing list because we will be reopening. on that date. So, you know what? It's going to be the last time we open for the rest of 2021. And I'm going to keep it open for, a few days, and then I'm shutting it back down to new members, and no one's, able to come in again. So, yeah, super excited for that. It's always great to have people, come back and, join us, and give people the opportunity, because we only have a limited amount of slots.
There you go, guys. September 8th, 2021. That's the date you need to put on your calendars. If you're not elite, that's the time. Make it happen, guys, because you can get in on trades like this, just like all of our elite members were able to do so and profit. And pretty much, you can cover a good chunk of your membership dues with 1 or 2 trades with us. We've seen it happen time and time again, guys. We have someone come in and be like, oh my gosh, I just took care of all my dues for the whole year in 1 trade. Guys, it happens, and it can happen to you too. So at this part of the webinar, I want to go ahead and open it up to all of our elite members here. If you have questions about the market, things you want to discuss, Riz is here. I'm here to read your questions. So please go ahead and post those up in the chat, and we can take care of whatever it is that is on your mind. IWM. All right, let's take a look at IWM. Russell 2000. Well, the Russell took a big jump on Friday. Juan, what's your thoughts on this? Are you thinking that whether you want to go long, or what is your plan?
Yeah, guys. So when bringing up, just a friendly reminder for those of us that are in the chat here, just make sure you actually say what you want us to do, right? Don't just send tickers, because I can get anyone to fucking send me stickers, right? So say what you want to do with it, what your thesis is, and then I'll chime in, right? But yes, I know what kind of Juan's asking. We've had a big rally in IWM, the Russell 2000. I would not honestly wait to go long at 230. Yeah, it would be the Russell 2000 is an index, and of course, this is the ETF for it, that tracks small cap companies, right? So I don't think small cap companies is something that I would really, really want to have too much exposure to, especially with markets extended. So I'm not sure what your rationale behind the trade is, and if it's purely technical, but it's not something I would be too enthralled by. I find there's better opportunities elsewhere.
All right, awesome. So Matthew says, what are our thoughts on CCXI long? Seems to have found support and could have tremendous upside. Well, let's take a look. Holy cow. Okay.
Yep.
This one.
Yep. CCXI is something I've been holding, and this is, moving slowly upwards, trending, especially the past week has been good for it. But one thing I will say is that I'm waiting on, at least, is I believe in October, beginning of October, I think, I don't have the exact date, but they have a big catalyst coming in. I think it's an FDA approval or reevaluation on one of their drugs in their pipeline. So that's the big catalyst that we want to keep an eye on. And you're right, it's looking good from a technical standpoint. Does it have tremendous upside? Sure, but then again, remember, it's been clobbered. Like, it was a $48 stock back in May, and it's dropped down all the way to like 12. Right, so it got clobbered. Why? Because the things didn't go as planned in that first FDA approval meeting. So this is their second crack at it. Let's see how it goes, and hopefully it goes all well. Again, I have a position for some time, reluctantly, but yeah, you're right. There is upside, but predominantly based on that catalyst.
It's definitely a good thing to know, guys, when dealing with, stocks like this. Obviously, FDA approval is a huge catalyst, or any type of delay, which is kind of what we saw here. So keep an eye on those. All right. Thoughts on CVS from a technical standpoint? Well, from my 2 cents here, it doesn't look terrible. It is bouncing here off the 50. It pushed through the 90 already. It does seem to be generally in an uptrend for the most part. Technically, it looks pretty solid here. You'd want to keep an eye on it here, probably around the 86.75 range, thereabouts. There does seem to be some selling going on in that portion. Riz, are you seeing anything else that I'm missing?
Yeah, no, CVS is a big chain. It's a good, solid company, and as Chris highlighted, they had decent earnings, just based on the numbers. I don't think it's a bad setup right now, especially with most of the moving averages just converging there. So if you do take a trade, you know what, go in with the mindset that, look, maybe I want to reevaluate what happens if it gets to around 87 area, which could be a potential, you know, area where people might take profits, or it continues to run and break out from that. So overall, not too bad of an entry. Uh, Not the best, but it's not too bad at all. I would be more interested if it hits around 80. That's just my personal opinion. But right now, it's not too bad. Maybe you want to take a starter, and see if it maybe pulls back or continues to pull back to 82 or lower, and then you scale in a little bit then.
Awesome. All right. So Matthew says, do you think TD would be a great investment? I know they're losing customers, and now that National has $0 trading, I can see it downslide, or has downside even more. Do you think personally that they're undervalued because of their reach on the investment market? Let's bring up TD.
So TD, we know, is the largest, one of the largest, um, Canadian banks. It's this it's irrelevant as to the trading. Their trading profits are not really much, to be honest. In the grand scheme of things, they make their money off of all their other products. So the trading commission that they charge is not the greatest. Canadian banks and brokerages have been holding out and ripping their clients off, by continuing to charge commission, simply because they don't have the economy to scale like the U.S. has. There's only about 33 million people, and there's only a small subset of that even have money in the market, and then even a smaller subset of that who actually trade actively themselves via brokerage. So National Bank going to $0 trading is fantastic for that Canadians, but frankly, I don't know how their trading platform or website is, but frankly, I don't think there's anything better than Interactive Brokers out there for Canadian brokerages and investors to utilize, because they're one of the best in terms of tools. And yeah, their platform may not be the greatest, but for everything that you get and at minimal, fees, commission, I think they're the best choice anyways. So to answer your question, no, I don't think TD is going to drop because of this news, and it's not really a big deal, regardless of what you may hear. But from a standpoint of entering, I personally would not. I think, I'm not. I think the banks are a bit too high flying, and yeah, they've done well to get through this pandemic and continue to make more and more money. But it's not something I'm looking to have a position or be bullish on, at least not until if it breaks below 64. That's personally my view. Usually when you get into these banks, you get into them for long term and to get a little bit of dividends.
Awesome. That was a fantastic analysis. Yas has a question. Do you see an opportunity to enter AFRM with the recent partnership with Amazon and other major tech giants, potentially with potential partnerships in the near future? But the Amazon partnership is huge, to say the least. Would you wait for the catalyst to die down and then enter? Thoughts on how you would approach something like this?
Yeah. AFRM. Yeah, it's where's that candle? It's not even showing the after hours candle where it rallied, is it? Um,
Give me a second. I can pull that up. There it is.
there it is. Yep. So either way, to answer your question, no, I would not buy it at this point. The trade is done. In fact, it's a obviously great catalyst, great news. But if anyone's in it, I would continue to take profits. I wouldn't try and squeeze this lemonade, or lemon, I should say. Sorry. And you're right. If it does pull back, to, I would say, even 70s, then maybe. But right now, it's way overdone. The company isn't the most solid fundamentally. Frankly, the opposite. They don't make any profit, and they're in a very, very high risk, I would say, business, because we know anytime someone buys something on credit or paying in installments, if they don't pay, who's on the hook for it? Well, it's companies like Affirm, and we've seen that there's a lot. There isn't much of a moat. Any company can do it. In fact, PayPal is able to do it. Pay in installments. Many of the credit cards are able to do it as well. Where if you have a larger purchase, they'll tell you can pay this one in installments. So the barrier to entry is very, very low, especially knowing that there's multi billion dollar companies like PayPal, Visa, MasterCard, so on and so forth, that can easily integrate that into their existing businesses. So Affirm is one that is a bit of a challenge to really I would say justify in terms of evaluations, especially after this run up. So no, I would not really be looking to enter this or try and get in right now. Maybe if it pulls back significantly, and we don't know how long Amazon's gonna. We just saw the news break. We don't know how they're gonna implement it. We don't know if it's gonna be on a select products that they allow installments via Firm. We don't know the details, right? So I find that maybe the reality is not as exciting as people make it out to be.
Sweet. Thank you for that insight. All right. Tom says, do you like Zim? I got in last week and they just had an ex-dividend event. I love that. An ex-dividend event that was $2 a share. Dividends are now an event. Awesome. Well, that was definitely a sweet ex-dividend. If you got in on that, yeah, $2 a share. Can't beat that.
Yeah, this is something I'm not too familiar with. Again, it's a recent IPO based on the looks of it. It's not something I've looked at or traded before. But that dividend probably good. I'm assuming it's probably a special dividend or something. But usually when we see this kind of happen, you know what the sometimes what we see is when a special dividend is given out, maybe the stock pulls back a little bit, because when a dividend is given out, that's essentially cash on hand that's left the company, right? So there isn't a free lunch where you just get in right before ex dividend and then you get your $2 earmarked and then you get out, which can happen. I'm not saying it can't, but sometimes we do see that on these kind of special dividend moments, we see the stock either continue to move sideways or pull back a little bit because that can be cash having exited the company in the form of dividends.
You see kind of the same thing when another company acquires another company. Oftentimes, the company that does the buying, you'll see the price go down because the investors look at it as, a loss of cash. Same thing as a dividend. All right, Matthew says, what are your thoughts on WKLY? Can weekly dividends work and can the underlying hold value?
I have no idea what this is. It's a weekly dividend ETF. That is, honestly, I'd avoid this kind of stuff, to be honest. It's not, it's I mean, it's new, like you said, but I just avoid this stuff. I rather have a solid, more capable, more controlled portfolio. I'd have to look at what this ETF holds. If they're paying out dividends weekly, it depends on what they're holding, right? What companies are they holding primarily, and how they're structuring their exposure to those companies. Personally, I feel like I can have I'm not getting a dividend weekly, but at least I'm getting it, quarterly or semi-annually, and I have more control of the stocks that I own, because as opposed to this ETF, which what if it owns shitty garbage, REITs or companies that just don't want exposure to, right? Just for a weekly dividend, no, it's not fucking worth it. So I'd rather be more selective, do more due diligence, because as great as this weekly dividend may sound, it's not that big a deal. They're just paying it weekly. I'd rather they pay me the same fucking amount, but pay me quarterly, right? It's not a big deal. And if that means that a company like this ETF can be more selective and be more stringent in their selection criteria, the stocks they do hold. So yeah, I wouldn't get too enamored by this. Ultimately, if you have a good due diligence process, if you have the ability to hold and buy solid companies, then you too can do great, without having to rely on stuff like this.
2 cents is not all that spectacular either. You'd need 100 shares to get $2 worth of dividends, and that would be a $5,000 investment. Yeah, it doesn't seem like the ROI is really there for me, especially if this thing takes a dump. That's my opinion. All right, so that seems to be the bulk of the questions. I just want to go ahead and close. Let's pull back here to the S&P 500 real quick. And Riz, why don't you give us a little bit of insight? What are you looking at this week? Are there any like key numbers coming out, reports, things like that? Or is there something we need to keep our eye on? I know last week you said we need to keep an eye on like Delta cases and the inflation numbers. Is that still your suggestion, or are you keeping an eye on something else this week?
Yeah, I'm keeping an eye on like you said, Delta is something that's ongoing. It's not. I think the market is pretty kind of over it. I think it's factored in, any cases going up or maybe a fourth, fifth away, whatever we're at this point. I think it seems to be that. I think it seems to be a case where the market is looking for something to give, meaning, is the Fed going to say something in their next meeting, or is the inflation numbers going to be the next print? I think it might be this week. Is the inflation numbers going to be hotter than expected? Because then that won't be too good. If, what if, the employment numbers come down to be pretty dreadful? Then that's the kind of stuff that will give the market some pause for concern. Otherwise, I think, barring any major catalysts, I think, we can continue to maybe trickle upwards. And frankly, we need to kind of be agile. I think if there's one thing that we need to do in this kind of environment is be agile, and have some cash on the sidelines and not be too overexposed or too eager to deploy capital at anything and everything. Hold your cards close to your chest, so to speak.
Awesome. Thank you so much, Riz, for coming out. I really appreciate it. Of course, to all of our elite members here, thank you guys for making it out to the live webinar and all of your fantastic questions. You guys are awesome. And like Riz said, if you're not an elite, September 8th, that is the day. So make sure you mark your calendars, get on our mailing list on our website, and we can see you here live on webinar starting in September. Riz, thank you so much. Really appreciate you coming out. It was always an honor to have you here on the show.
Pleasure is mine. Thanks for having me.
Awesome. And as we always like to say, guys, have a great weekend, relax, get recharged, because Monday we're going to be back at it. So guys, we'll see you in Discord on Monday. Good night, everybody.